All right, so today we will talk about, I will talk about BRIC and RealEstate.Exchange, which we have been working on in the background for quite some time. Just to take it from the top, tokenization is, and tokenization of real world assets is the holy grail, as Klaus already mentioned. The World Economic Forum estimates that 10% of global GDP will be on the blockchain by 2027. Putting real-world assets on the blockchain is a necessary mean to get to that goal, no doubt. I mean, the crypto market is growing, but you know, if you really want to grab or capture 10% of global GDP, we'll certainly need real-world assets there. So that's what we are working on. DigiShares and RealEstate.Exchange has a unique opportunity, I believe, if you ask me personally, to solve this issue. And hopefully I'll make that clear why in a second. Just to talk about DeFi, decentralized finance, which is the space that has sort of exploded the past 1.5, 2 years-ish. You can see the historic graph. Maybe I can remove this so you can see the actual number. So since 2017, you know, DeFi was sort of a dead thing. Most things in DeFi are built on Ethereum, and that's when Ethereum really started to gather some interest from the development community. But only of recent, as you can see on the historical chart here, only of recent, it's the DeFi space, decentralized exchanges, and being able to trade and transact in a decentralized way, it has really picked up steam. Since last year, in November 2020, it's a sector that has grown from $12 billion to now surpassing $100 billion. Well, at least until the recent correction that we saw with crypto dropping, what, 10-15% or something. But nevertheless, even though DeFi and crypto is fluctuating a lot, proponents argue that the financial industry is undergoing the largest changes in the next 10 years than it has compared to the previous hundreds. The train is coming, and it's coming fast. And we see that, I think, by the total value locked into DeFi, the curve or the trend is pretty clear. Now, when it comes to real world assets and DeFi, there are a couple of challenges. That's why we don't see it really today, even though the DeFi space has been around for 4 years. Right now, DEXs, decentralized exchanges, are just, quote unquote, focused on crypto assets. No securities are really being traded on the top decentralized exchanges. And what has happened, and that's why it hasn't really gained much traction, is that the DEXs, the decentralized exchanges that has added real world assets, they have isolated the liquidity to only their liquidity pool or their system. And as a result, because the markets have not been very liquid, as a result, the price impacts, which is what I'm showing here in the screenshot, are excessive. Just trading, in this example that I show here, just trading $1,000 worth of a certain real world asset moves the price more than 70%. In practice, I mean, the decentralized exchange works, in theory, I guess, but in practice it's unusable, right? Because you would never go in and trade any asset that has a price movement, a price impact of more than 70% when you only trade for $1,000, especially not real estate, as you can imagine, which is typically larger trades. So why am I telling you all this? I'm telling you all this because we are overcoming this issue, or trying to overcome this issue with our efforts, by partnering up with blue chip, I would almost call them, protocols like Balancer. Balancer, as I show here, is the 4th most popular DEX, and hopefully soon taking the top 3 spots. I would at least argue that it should soon enough. But Balancer, as you can see here, has more than $2 billion worth of value locked up in their protocol, which means that when we integrate with something like Balancer, we tap into more than $2 billion worth of liquidity that is already in their protocol, and hence avoiding an issue such as very large price impacts. This is where Real Estate Exchange comes in. So we will partner up. Our approach is to not do everything ourselves. Our approach is to partner up with people who are doing outstanding work already, such as Balancer, and Jeremy, and perhaps also Benny will talk about that more in a minute. But our approach is to partner up with them, linked to do what we do best, which is in this case focusing on issuing tokens and list them on our decentralized exchange, which is called Real Estate Exchange. And then the rest, basically linked to the rest, such as protocols like Balancer. And the features that we will provide in RealEstate.Exchange is, first of all, issuance. You need to be able, in order for you to trade real estate on the blockchain, you need to be able to issue your tokens. Now, when you do that, there are certain things that you need to have in place. You need to verify ownership of the underlying assets. You need to know that it's not just hot air that is being sold, but actual real estate. You need to whitelist wallets, so you know who can trade and hold tokens in a compliant way. When you deal with security tokens in general, compliance is a whole nother threshold than just native crypto assets. So issuance, there are certainly some regulatory pieces that we need to have in place before we just set this up. Liquidity, which is very much the holy grail, if you ask me. Why would you, as a real estate developer, issue tokens on the blockchain? Well, you would do it if you know that you would tap into a very liquid market, basically making your very illiquid investment, your real estate asset, into a very liquid one if you issue it on the blockchain. So liquidity is, if you ask me, the holy grail, and this is certainly where Balancer, the partnership with Balancer is key. And then finally, collateralization. Once you have a liquid market around your real estate tokens, you know the price of the real estate tokens or the real estate property, then you open up for all kinds of cool applications. One is the collateralization, where you can basically borrow against your real estate tokens, which I will talk about in a minute. So yeah, just to give a little bit of overview, a little bit of color on this. DigiShares have already specialized for quite some time in issuance. DigiShares is setting up white labels for real estate developers already, and we will tap into a lot of this knowledge for Real Estate Exchange. No need to reinvent the wheel when we know how to do it. So you could expect something similar to what DigiShares are doing on Real Estate Exchange when you issue the tokens initially, with all the compliance built in, all the corporate management and internal trading that can be done. On liquidity, as I mentioned a few times, we will tap into special balancer pools. The one of many things that is cool with Balancer is they are really set on getting traditional finance onto the blockchain or into DeFi. And it's very clear from my seat that they are committed to that. They are building new types of liquidity pools that has never been seen in DeFi before, where all the compliance mechanisms are built in. So we are some of the first, from what I understand, to work with this, at least within real estate, and it's looking pretty damn good, if I must say. By doing this, obviously, we will have liquidity and perhaps even trading volume from day one. We don't have to invent the market; it's already invented and operating on Balancer already. And then finally, once we have the issuance and the liquidity in place, this price discovery will start happen as people are trading with each other. Then we can start doing all these cool stuff, cool things like collateralization, We are talking to protocols that exist already, back to the original ethos that we want to link to people who are doing it already and doing it well. Aave is a very, very big, if not the biggest, liquidity market on the blockchain, where people deposit tokens onto their protocol as collateral. And then Aave allows, the liquidity market on Aave allows you to borrow against those tokens. Now, Aave is introducing an Aave Pro version, which is basically Aave just whitelisting the wallets. So you need to identify yourself, do KYC, etc. And that's the missing piece in order for security tokens and real estate in our case, to be able to operate with liquidity markets like Aave. So with Aave Pro and with RealEstate.Exchange, you hopefully will be able to deposit your real estate tokens that you own and then borrow against them. This is probably a bit down the line. It's not going to happen tomorrow and not the day after tomorrow either. But this is certainly something that we see on the roadmap and what we want to be the first at solving together with Aave, for example. And last but not least, I just added a quick slide on this because a lot of this is possible because we are introducing our own utility token called the BRIC token. I can't tell too much about it, mainly because we haven't finalized everything around the legal setup. And until we have that, we're not able to sell the tokens and promote and all these things. So I'm just going to be extremely brief. And if you want more information, feel free to reach out. We can go on a call and a more deep dive. But basically, as I said, BRIC is the centerpiece very much between all the real estate tokens, which I call RE1, RE2, etc. on the right side here. BRIC is very much working as a bridge between those and all the other crypto assets that you see already on Balancer and other DEXs, including Ethereum, USDC, a stablecoin in the US dollar, DAI, Matic, and all the other crypto assets that you're already able to use and trade with on Balancer. But yeah, to summarize, reach out if you want to hear more about our BRIC token and of course our DEX, RealEstate.Exchange. Thank you.
Very nice, Mark. I know that you're not joining the panel, but there is one question for you and we just have a few minutes.
Yes.
So it says, can you describe the properties of the token? And the question is, does it represent direct ownership of the real estate?
So the short answer in terms of owning real estate, that's a no. I believe I can talk about this. I hope nobody's going to come after me for this. But we have certain utilities built into the BRIC token, but it's not necessarily owning the underlying real estate token that we see. So remember that these real estate tokens are being issued by, let's say, a real estate developer. And then what happens is a real estate developer will issue the tokens because they own the real estate ultimately. And then next step after they've issued it is to be able to make it liquid. In order to make it liquid, you need to add your tokens to a pool. If you want to add your tokens, your real estate tokens to a pool, you need to have a certain amount of BRIC. This is where Balancer, again, I think are quite pioneering because they allow for the weights in a pool to be different from 50-50%. Normally, when you go on other DEXs, you have to provide, if you want to provide 1 million worth of liquidity, you have to provide 500,000 of the real estate token and 500,000 in BRIC token. But you as a real estate developer, you won't necessarily want to buy 500,000 worth of BRIC token. And that's where the smart pools are clever because we can change these weights so it doesn't have to be 50-50. Now, in terms of the exact utilities that we build into the BRIC token, I prefer to take that on a separate call. just so I don't promote something that I'm not allowed to yet. Hopefully I will be very soon. But I don't want to run the risk of promoting too much at this point.
That's quite all right. I'm sure you will get the opportunity. There is a follow-up question by anonymous attendee, but I think that is more appropriate for Balancer. And also your time is pretty much up. Thank you very much, Mark, for joining us today.
All right. Thank you, everyone.